If you have any questions, which we hope you will, we're going to have a lot of time for Q&A at the last third of the hour. So either raise your virtual hand and I will call on you to ask your question, or write your question in the chat and we'll make sure to ask it when time comes. And today we're going to cover kind of three main things. We're going to start with walking you through a little bit about the landscape of digital payments and how does the IMF help countries in this territory, and as well as other international organizations. And then we're going to dive a little bit more about behind the scenes of how this could be done by taking more of a human-centered approach. And then going to talk into quite details about the fieldwork that were conducted in this case to understand the behaviors and to use a behavioral science framework in order to shape this entire engagement. Of course, then time for questions and answers at the end. One important disclaimer, the views expressed here are of the authors and not necessarily representing those of the fund or its management. And with that being said, let's kick it off. And I guess the first question for you, Arif, is if you could start by exposing us to the miraculous world of central bank digital currencies and digital payments. I know we all hear about it all the time, about crypto assets and digital coins, and it sounds so fascinating and futuristic and the thing to be aware of, but how does it actually work? What do countries do? How do international organizations support countries these days in crossing this really interesting field?
Fantastic, Elad. Super excited to be here, and super excited to be able to provide this kind of context setting for what's to come from Sally and Pedro in terms of what happened behind the scenes and actually in the field, right? But without the context, what Sally and Pedro might say to you might be lost. So I think the starting point is that the context of this is technical assistance to Peru, specifically on a topic of central bank digital currencies. And maybe to take a step back, we know that with rapid technological advancements, Elad, like blockchain and cryptography and mobile devices and communication networks, the opportunity for digital money is forthcoming, right? And there's two types that we can think of usually. One is what we would call digital assets and or private digital money. And people would be familiar with products like Bitcoin. You can now send an asset across the globe in a matter of minutes, from your mobile device, etc. People would be hearing of Tether. It's been in the news, a stable coin over the last 2 weeks. That's forms of private digital money. But of course, the mission to Peru was focused on a public form of money, potential public form of money, called central bank digital currencies. And to keep it simple, the way that we conceptualize this is like cash, but in digital form. So often when we get cash, we think of it as, I've got dollars in my hands, etc. I got it from an ATM from my commercial bank. But in actual fact, what you've got, Elad, is access to central bank money in the form of cash. Now, if you think of that in digital form, that's what central bank digital currencies are all about. Now, the context in Peru is that there's still a significant amount of users that use cash. There are many forms of electronic payments, including e-wallets, but there's a stickiness to cash. And the question that the central bank has at the back of its mind is, can you actually issue central bank digital currencies and see a shift from paper to cash? Are they alone in this journey? The answer is no, they're not alone. So with this graph, you'll see that there are lots of countries across the globe now, probably more than 100 IMF member countries looking at CBDC. And the interesting graph here is the third bar from the right-hand side. You see there's lots of experimentation, etc., in Latin America and the Caribbean region. And the reason for that, again, is many times there is a dependency again on paper, on cash, and there's this move or desire towards digital instruments. And sometimes in the Caribbean region, there's also geographic challenges, right? There's islands, etc. And how do you get the cash across? So CBDC is often top of mind for, can it resolve the inefficiency issues related to cash? Given the significant amount of work it had happening by members, it's not surprising then that the number of technical assistance requests that we have just over the last year has surpassed 30 requests. We have 15 ongoing bilateral TAs across the different regions. I won't spend much time on that, except to say that what's important from a contextual perspective is that to match that demand, we have 4 types of products. I'm not going to go into the detail of each, but I'm going to try and position that, the one that stands out the most is this bilateral TA. It's where we provide very tailored hands-on advice to member countries, and where we customize that advice depending on what the jurisdiction's context is. But the way that we approach that usually is based on where is that member country in terms of their journey. Are they at the exploration phase? If they're in the exploration phase, they may be asking really broad questions, like what's the pros and cons of CBDC? What are other countries doing on it? But as they move on into the next phases, they start to ask really detailed questions, like what features shall a CBDC have? Should we consider an interest-bearing CBDC? Should we consider putting limits on the CBDC if there's wallets? Would there be holding limits? Would there be transaction limits, etc.? And then how would the laws need to change and so on? But as they move on into the pilot phase and into the actual production phase, the questions that they ask are much more related to policy-related questions like what could the impacts of CBDC be? Now, unsurprisingly, and the point of this slide isn't to go through the detail of trade-offs and synergies between these policy objectives, but the point of this slide is to demonstrate that our approach usually to the TA is to provide conceptual frameworks that help the country think about these particular issues. So I'm just going to use a quick example. If a country is thinking about managing the trade-off between financial inclusion and financial stability, or financial inclusion, or financial integrity and privacy, they'll think about designing CBDC in a particular way. And what we do is we provide these particular types of frameworks during the TA mission in order to help the countries think through that. Nothing wrong with that, right? What's important, though, is to kind of take a step back and say, well, if a central bank usually is not involved in retail payment systems, right, how do they connect with what the actual issues are on the ground from a customer perspective? It's useful to have these frameworks, but I think it's fundamental to actually go back and listen to what the main challenges are that arise from a consumer perspective, especially around things that we're going to hear from Sally and Pedro around behavioral and motivational aspects. So again, this is typically how we structure the TA. I'm not going to go through the details on the right-hand side, but from a bilateral perspective, what we kind of land on is presentations. That's our modality. It's a bit of discussion, a bit of workshops. We might bring in some experts who have done CBDC before in other jurisdictions, but the mode of operation is pretty much conceptual, drawing frameworks, reflecting on policy outcomes, etc. What we did differently, and then I'll conclude and pass on to Sally, is we used this design thinking approach. And often people think that when we say design thinking, we mean thinking about the design of CBDC. That's not what we mean. We mean fundamentally going back to first order principles, like what are the underlying assumptions that you have when you're thinking about CBDC? How should it be designed? What types of use cases should you put in? Is it even a solution that should be appropriate for a particular jurisdiction? Could there be other solutions? So we had to, in this TA mission, remind our friends from Peru, don't just put the solution on the table. Go back to truly understanding the root causes and the problems. And I'll conclude and pass on to Sally by saying the most important piece conceptually, again, that we had to position as a mindset for this TA is that you are not the user. Go back to your users and truly understand what their issues, pain points, and concerns are. With that, I'm going to pass on to Sally for more detail. Thanks.
Thank you, Arif. So Sally, how do we take it forward? How do we take something that is as complex as digital money, that has so many layers to consider and to be the driving force of such project from a technological standpoint, from a legal standpoint, from an economic policy standpoint, and we make it as such so that the human centricity of it is what's driving the process?
Absolutely. Thanks so much, Alaa. That's a really great question. So, as Arif had actually been describing, and as you just laid out, the traditional approach to these missions is to offer guidance from the economics perspective on legal and regulatory matters, and in cases like these, especially that deal with digital currency, on the relevant technological options as well. So what was novel in how we approached our engagement with Peru was the addition of this design and behavioral dimension to our guidance. Bringing in the human-centered expertise really rounds out the holistic service that we can offer to countries in the course of providing this kind of technical assistance. But what does that look like? How does human-centered design work in this context? And how is it different than the questions that might be asked by the technologists? I like to share a short anecdote to answer this question because it really captures the value that was added by this approach really well. So in a conversation with a technical specialist that was briefing the group on various options currently available in the cryptocurrency market, they explained that one of the technologies, for example, assigns a unique 30-digit identifier to accounts, and thereby it might be preferred because it means that there's no need to store personal information outside of the central ledger that the system operates on. And at that point in the conversation, we were able to come in with, okay, that makes sense, but from an end user perspective, how often would you be expected to recall this 30-digit code in your daily life? And it was a surprise to all of our colleagues to all of a sudden be asked to think at that scale. So when the norm for these types of conversations is to focus on the big picture, on systems architecture and regulation and policy implications and technological options, it's exactly this human element, the perspective of the end user, that can easily be missed. So we use this kind of thinking as our guiding framework for how we approach the engagement with Peru. And as Arif had said, to start, their request was to investigate whether digital money issued by the central bank, the CBDC, would be feasible in the Peruvian context, where cash is king and there are very low levels of formal inclusion in the financial system. We also had to understand that there was a certain element of risk from the central bank's perspective as well, because they sought to assess feasibility without publicizing their efforts, and they were still at the point of cautiously exploring their options. But what remained unclear to us was what problems the central bank was aiming to solve and whether CBDC was the appropriate solution. So design thinking as a methodology is an evidence-based cognitive approach that's engineered to answer just these kinds of questions. So following this process, we worked with the central bank to first understand more about the current landscape in Peru, who were the players and what were their motivators and the issues that were facing them. Having done that, we were in a better position to identify the problems at play that the central bank hoped to solve and articulate the scope of the challenge before us. And from there, we could begin to explore a wider pool of potential solutions and then proceed in an iterative manner, building our understanding by prototyping and testing. So pulling the central bank through this cognitive process, through this flow, was extremely successful. We were able to identify stakeholders as either enablers or blockers, and build a picture of their complex motivations. We also surfaced assumptions and areas where our understandings were murky that might benefit from more investigation. And importantly, we focused the entire narrative on the end user, building our understanding of the system map around the consumer perspective. Due to the depth and wealth of all of the insights that we resulted from this, the central bank was fully bought into the behavioral approach, and we were then tasked with going deeper and broader into the discovery by conducting interviews with the Peruvian stakeholders themselves, including consumer populations on the ground, which Pedro will talk about in his portion. And as an aside, the central bank even asked for training on design thinking methodology. They loved it so much, so that they could begin using it in their work outside of the context of the mission. And so that was very cool. In carrying out our stakeholder research, we spoke to some of the top level leaders in the Peruvian payments ecosystem, including CEOs, presidents, directors, and founders from payments infrastructure providers, regulators, leading consumer and state-owned banks, prominent fintechs, retail sector representatives, and we were able to gather instant feedback from all of this diverse group to begin to validate or falsify the theories that have been brought up in our first conversations with the central bank. And in addition, because we proceeded through our research as a white-labeled study, we were able to include their voices without exposing the sensitivities of the mission. And by white-labeled, I mean that we concealed the IMF's mission objective from the participants, and we didn't discuss CBDC directly. So overall, we gathered 22 hours of raw interview material from 29 key stakeholders in the payment system, and their enthusiasm to take part in the study and offer their perspectives of financial inclusion and digitalization issues in their country and in the region led to an even more richly detailed image of the system than we'd begun building with the central bank. We qualitatively coded the raw data from the interviews by theme and synthesized it to tease out nuanced details. We identified trends in their perception and reasoning and looked at which stakeholders had outlier opinions compared to their peers. We examined the behaviors and habits that were both self-reported and the ones that they observed in others. And we extracted underlying explanations for those behaviors. And we also cataloged the pain points, enablers, and blockers in their experience and in the experiences that they observed in the consumer market as well. Having collated these results, we presented the findings back to the central bank, who were so impressed with the scope of what we'd returned with that they congratulated us on covering so much in such a short amount of time. Our reporting brought to light elements that might not have otherwise been a part of the mission conversation, and we were able to present the Peruvian authorities with a wealth of insights. And it's true that some of them they might have already been familiar with, but in equal measure, many were remarkable and shed light on new approaches and considerations for the central bank that they hadn't thought of before. And I have just a few of these to share as examples. For one, when we looked at the business's perspective, our earlier conversations had focused around the idea that small entrepreneurs typically prefer cash for its anonymity, in part so that they can avoid taxes. But we expanded this understanding to include a variety of reasons for this preference. For one, they're also looking for options that are more convenient. One stakeholder told us that he was even seeing people turn to loan sharks instead of traditional lenders because of the convenience factor. He said they come to their place of business, so the business owners don't have to close down for the day to visit the bank, and they don't need to fill out paperwork or provide collateral. It's much better for them. We also heard about the need for cash liquidity that's built into the supply chain. A small business representative told us that we have no choice but to incentivize our customers to pay in cash. We always need to have enough cash on hand to pay the distributors, otherwise we have to close up shop so we can go to the bank. The same happened with our initial understandings of the payment system. For example, we'd started with the central bank discussing the issue of poor interoperability between existing retail payments options in Peru. And by conducting our interviews, we were able to lend insight into how this problem actually manifests on the ground. For example, the average Peruvian can't complete a ride on public transport without having to switch between multiple payment systems. And this illustrated the importance of ensuring the full interoperability throughout an ecosystem in order for the consumers to benefit. We also heard time and again how frustration and uncertainty with which payment forms would be accepted leads people to default back to cash. On this point, someone said, "I don't know anyone who won't accept cash. You can't say the same for the others, so why make it complicated?" And these examples just scratch the surface in showing how our conversations with stakeholders brought more nuanced understandings to the problems at hand. And it was just all possible once we were able to speak to people who had intimate understandings and lived experience of the realities in the Peruvian system. So overall, the value of taking the behavioral approach was well proven by the end of the stakeholder engagement. We'd successfully illustrated a complex and detailed system map at a level beyond what our counterparts in the central bank were capable of fully articulating or self-reporting themselves in our conversations. And in doing so, we identified numerous and critical assumptions and areas of risk that we should take forward as the focus for continued investigations and testing efforts. We also, for the first time, and of course, we included the direct perspective of stakeholders and ultimately consumers as well to become a part of the TA, which wouldn't have been the case otherwise and was of great benefit to the mission.
Thank you, Sally. And it was incredible to see how basically started hearing voice of stakeholders and taking that systematic approach to identifying the players and identifying the motivations and identifying their angle to staking in that really starts to reshaping the framework, as Arif was saying, about how do we go about such a large scale project. But that wasn't enough, right? Because at the end of the line, we have end consumers who will need to use this new form of payment in order to make it valid, in order to make it ubiquitous enough, in order to create this network effect. And for that, we really kind of needed to take it to the next step, Pedro, right? So how do we take it to the next level of understanding the behaviors and helping them shape such a project?
Sure. Thanks a lot. Hi, everyone. Let me tell you a little bit more about our project. IMF's team gave Heuristica, the consulting firm I lead, a very interesting mystery to solve. What barriers are there in moving Peruvians from cash to digital payment solutions? And going further, we had to find out the best design strategies and tactics to encourage the use of digital tools from a behavioral science perspective. Here are a few statistics that show the importance of understanding why Peruvians are so inclined to use cash over digital options. The pandemic forced many people to start using digital payments, increasing the use of mobile banking by 30%. However, around 48% of the population still didn't have a bank account, and around 48% of the population didn't have a bank account yet, and still 40% use cash as their primary payment method. These figures confirm that even with all the advancements in technology available to the Peruvian people, there was a lot to unpack if we want to understand the psychology behind the preference for cash payment. How did we approach the project? We applied the behavioral science lens to identify a series of hypotheses that could explain the preference for cash and later validate or reject them via qualitative research. To produce these hypotheses, we combined information from the scientific literature about heuristics and biases that explain perceptions and behavior under uncertainty. We also included studies about the barriers and facilitators of digital payment from around the world, and our previous experience with more than 20 research projects for the private banking sector in the country. This final point gave us a key advantage. All the knowledge we already acquired about the experience of banking customers from a behavioral science approach allowed us to focus this time on the nuanced aspects that we didn't know yet, producing more robust and detailed outcomes for the IMF. Let's review some details about our methodology. Last November, we conducted 27 interviews using the COMBI model framework, which explains human behavior as the interaction of capability, opportunity, and motivation factors. And we designed semi-structured interview guides to understand participants' lifestyles, beliefs, and experiences. The interviews included people that mostly or exclusively use cash located in urban and rural areas of Peru. 14 participants were men and 13 were women. The average age was very close to 40 years old. They had different professions and none of them had a high income salary. We conducted these interviews via phone and Zoom, and they generated more than 30 hours of recorded information for the designers of IMF. Our behavioral diagnosis uncovered a large number of barriers and facilitators of digital payment use. We classified them into these 13 categories. Today, we'll discuss the barriers and give a brief overview of the findings, which will give us a good idea of what we learned. Capability factor. This includes the cognitive and physical skills required to do the behavior. About awareness, people simply don't know, some people simply don't know how digital payment alternatives work, or they simply don't know their existence. Regarding knowledge and skills, if they are aware of them, they don't know how to use them or they find them difficult. Also, they don't know about the security mechanisms that the banks have developed. Attention. People don't pay attention. Some people don't pay attention to important information about digital payments and banking conditions, which later make them pay unexpected, undesirable fees. Behavioral regulation. A couple of interviewees had credit cards in the past, but didn't use them anymore because they had problems controlling their spending. Opportunity factor. This includes the physical and social context that allows the behavior. Regarding infrastructure, for many people, digital banking payments aren't accepted in their towns or neighborhoods. They only use cash. And when they can use digital payments, vendors charge extra fees, or sometimes the electronic system of the bank simply fails. Environment. Some people get paid or receive their income in cash. People receive money in cash and they make payments in cash, so there aren't strong reasons to turn to digital alternatives. Resources. They don't have the financial and technological resources needed to make digital payments. Many people in Peru don't have the financial resources to maintain a savings account as they live paycheck to paycheck. They don't have money to buy a smartphone or to buy an internet plan. We also found that even if the necessary infrastructure is available, many people don't have enough storage space in their phones. Downloading mobile banking apps means deleting other apps that are more important to them. Or even more painfully, they will have to delete photos, which we know no one likes to do. Social influence. For many people, their social environment doesn't promote the adoption of new payment methods. Some participants, especially from rural areas, mentioned that people who go to the same places as them, their friends and family members, also pay only with cash and have never recommended using another method of payment. Also, some people have heard comments from their close circle of influence about negative experiences with the banking system. Another very interesting finding is the fact that having family members who have bank accounts and use banking apps actually could discourage participants from opening their own account or start using an app. They said that they don't need to do it because someone in their family can make the transactions on their behalf. This could be related to the fact that families, even extended families in Peru and many countries around the world, usually live together and share their resources. These findings are another challenge to the idea that social norms always promote the adoption of a desired behavior. In this case, concepts like division of labor or our instinct to avoid unnecessary pain, effort, or hustle could be more powerful drivers of behavior than social norms. Motivation factor. This includes the realm of habits, needs, emotions, and beliefs. Habits. Many people have established routines regarding their purchases and payments. For example, they like their shopping routines in places where cash is the default, such as markets where they know the merchants, the neighbors, and it's a friendly environment. Habits like these ones like this one can be very hard to change because they have been built over many years. Regarding emotions, they have negative emotions towards paying with digital tools. Some participants were scared of using digital payment tools for fear of getting robbed or hacked or getting their cards cloned. They were surprised and angry when they learned they had to pay unexpected fees. They were afraid of making mistakes. They felt frustration and embarrassment when the tool didn't work and they couldn't pay, making them feel embarrassed because other people might think they don't have enough money in their accounts. Reinforcement. They had memorable, specific bad experiences in the past using digital payment methods, and they extrapolated these negative feelings to the banking system in general. Identity. They don't think digital payment methods align with their self-perception. They feel that alternative methods to cash are not for them, especially for older participants or people who live in rural areas. And finally, beliefs. Many people believe using cash is better than digital tools because it's faster, it's more secure, it helps them control their finances. For some people, cash is strongly associated with everyday purchases, and two participants said it helps them maintain their anonymity. Takeaways and recommendations. Our study found a long list of barriers and facilitators that interact in a complex way to influence people's adoption of digital solutions. So the main takeaway is that there's no single solution, no one single recipe that could make everyone change their behavior. Therefore, segmentation and targeting of the different population groups for the design of tailored solutions must be a key element of the strategy. But regardless of the specific needs and characteristics of each segment, it's possible to change the beliefs about the benefits of digital tools. We can achieve it by enhancing the subjective value of the outcomes these technologies bring to people's lives. Based on the findings of this research, we produced a framework for IMF consisting of a series of recommendations that can potentially increase the perceived benefit, satisfaction, or utility of non-cash payment methods. This blueprint emphasizes the need to solve this challenge from different angles to create the right conditions, the right stimuli, ideas, and features that make people perceive that using digital tools will lead to better outcomes. We name it the digital payment musts, where we organize our recommendations into 6 dimensions: infrastructure, product, costs, communication, distribution, and service. We, the heuristical team, really enjoyed working on this project, and we believe this research provides lessons that are applicable not only in the Peruvian and Latin American markets, but potentially in many countries that form the global south. Back to you, Elad.
Thank you, Pedro, and that's fascinating. I want to stay on that last slide and ask you and Arif a question. And for everyone, I think this is now where we start the discussion. So feel free to raise your hands or to put your questions in the chat, and I'll pose them. So just like as a first question, so we have these digital payments musts, which are kind of the categories of the framework to take it forward. Now what do we do with all this information? And congratulations to you all for being able to summarize. I think when we presented the results of these studies and these efforts so far, it took us on average about almost 4 hours to go through everything because of the huge amount of information, and you were able to conclude it nicely. But what do we do with all of that? How this now helps us take the appropriate approach or the adequate approach into the next phases of such projects? And Arif, I don't know if you want to respond to that. And again, start raising your hands and putting your questions in the chat, and we'll start rolling with the other ones.
Fantastic, Elad, thank you. So the next steps, particularly for Peru, if I start there, is to take this information that's been gathered, the richness of it, and think very carefully, not just as Pedro pointed out, around one track. Let's say it's central bank digital currencies as an example, but to use this information for many tracks that they have going. So the information that's been gathered has been extremely valuable for them in now thinking about this next phase of their project. This next phase of the project, would typically be thinking about validating some of the assumptions, right, in a proof of concept or proof of assumptions kind of phase. And this is where they are now. What this means more broadly away from Peru is to keep reflecting in our TA methodology as to how valuable these type of techniques could be for these type of efforts, where it isn't typical TA, if I could put it that way, where there's an established set of standards or principles that one's trying to apply, but in this ambiguous field of designing payment systems, how do we apply some of these techniques in it? Those would be the 2 quick reflections on it. Thanks.
And maybe Pedro, the same question to you. How did you see in the past institutions taking such a large scale initiative based on typical findings or alike findings that dived into really the habits and the barriers and the beliefs and identities of potential end consumers?
Yeah, as a consumer, as a Peruvian citizen, I would love to see the results of this project. We propose several ideas, from high level strategic view to tactical. My personal favorite is the one that focuses on reducing fear related to digital payment, specifically the anxiety generated from making payments or transferring money. We suggested designing regret cool-off time of a couple of minutes that could be customized, where people could undo a transaction before it's sent to the other person. So these kind of features, I would love to see them implemented in the near future.
Thank you, Pedro. So I'm starting to go through questions on the chat. Again, feel free to also raise your hand should you wish to ask it in your own voice. And first question, I think, is for you, Arif, and it's about the strength of maturity of cybersecurity. And then we know how big of a role that play, and basically, right, how much does it play in assessing the viability of CBDC, and did we see big gaps there?
Yeah, this is quite fundamental. So cybersecurity is a fundamental matter. We raised it in the report as a matter that should be considered in the design all the way through, right? But what's important in the context of Peru is that, remember, we had, through this methodology, asked them to take a gentle step back. So there isn't a design on the table right now, but as they go through these next phases, this would be top of mind. One of the elements would certainly be cybersecurity. And whatever assumptions they may have at the back of their mind in terms of the strength, and I'm just using it as an example of a tokenized network or a distributed ledger network or whatever it may be, this will come out in this next phase. It's certainly top of mind. Great question.
Fantastic. Another great question is about the regional level. So if the informal economy doesn't it get tracked regional levels?
I'm
I guess
not
this is for you
certain.
as well, Arif.
Yeah, I'm not certain what that means, Elad. Maybe Madhavan can come in very quickly just to explain what the question is.
I don't know
If
if
possible. Maybe not.
okay, maybe we can park it aside for a
No
second. And
problem.
I see Francesco has his hand out. So Francesco Luna, if you wish to raise your question.
Yes, thank you very much for the presentation. One question is the following, or actually a couple of questions. If these were an econometric examination or investigation, one would wonder whether whether the sample is sufficient, whether you have collected enough information to really assess the situation. Also, since it looks to me that you mentioned these interviews, 27, which in itself seems to be a small number. How and also so that was related to the sufficiency of the sample. But also the other thing is that since it was collected, this information was collected through an interview process. And
Yes.
we know from behavioral science, if you want, from psychology, that when you interview people, they may not actually always be willing to reveal their, sorry, as an economist, their preferences, but expose their actual feelings or complete information regarding the question asked. So how did you assess that the information that you gathered through these 27 interviews was rich enough, sufficient enough for you to proceed along the ways you did? Thank you.
Yeah, thank you. Great question. This was an exploratory research that had the objective of provide supplies, resources to the creative lab of IMF. Of course, as an exploratory initiative, it's the first step in the research process. Of course, we should include, if it's the desire of the team, quantitative information to this eventually. And what was the second question regarding the 27 people? How did we do it? I think it's the skill of how to word the answer. How do you manage the conversation with the person? And understanding this is a limited approach. You should triangulate this research approach from different angles.
And maybe I can jump in there as well, Francesco. In total, we had almost 60 interviews. So there were hours of in-depth interviews with end consumers, but also with stakeholders. So a total, the number of interviews that were run is again almost 60. And that's an incredible question, because this is exactly right where the uphill battle might be in incorporating such methodologies within a very quantitative institutions, because the qualitative approach is a bit different even from the methodological validity, where we're looking for not a statistical assurance per se, but for a saturation point, for a point of which the interviews that you are conducting, and you're conducting it, of course, in the most reliable possible standards. But when you start getting into the same points over and over again, start getting repeating stories from totally different interviewees, from totally different demographics, then you are getting into that convergence point where you understand that you have something in hand. And even though it might, again, not be statistically proven like in a quantitative approach, that gives you a very strong understanding of the things that are hard to prove statistically, of the identity questions and beliefs questions and the emotional questions. But the saturation point is really strong. The literature actually, I think, indicates around 30 conversations, usually in most qualitative research, around 30 or low 30s. This is usually where the saturation point is. In this exploratory effort, we actually went above and beyond, almost double that number to make sure that it is as valid as we can. But this is indeed a question that is keep being asked, especially when we work in an environment of economists. And that's thank you for bringing that up here. And I see another hand from Chandra.
Elad, can I
I'm sorry, Arif,
add my 2 cents worth? My 2 cents worth on it. So this is such an important question, Francesco. It was even asked by the central bank in terms of the methodology that was being used, etc. And to put it in my own kind of language, I would almost think of it as you captured, Elad, not as statistical generalization, right? You're not trying to generalize to a population, and it's two different types of logic, right? This logic is more about discovery, right, than the logic of validation, and that latches back to what you were saying, Elad, in terms of the saturation point and the number of cases being 27, right? Yeah, and more. Yeah.
So I see hand by Chandra, if you want to speak up, please.
Hi, everyone. I'm Ananya. So my question is basically regarding, because there's a lot of literature which says that when you pay digitally vis-a-vis via cash, you end up spending a lot more. So when we are promoting digital payments, how do we kind of address this concern as well?
Meaning, Ananya, that you pay more when you are using digital means versus cash?
That's correct.
I mean, this is an interesting point, a quick reaction, right? I think this type of feedback is useful for thinking about how does one then construct the digital design? How do you accommodate for that? So do you have structures that limit particular transactions? And do you empower the customer to do that? I'm going to set the limit on groceries, on travel, and so on. These become interesting aspects to the design. So I think well-made points. It needs to be baked into the design if this is fundamental and core in the context.
That helps. Thank you so much.
Thank you, Anand.
Thank you. Yes, I see another hand by Karim.
Yes, thank you very much for the very interesting presentation. I was wondering if you could elaborate a little bit about the trade-offs that you presented very early on in the presentation, and perhaps give us a little bit of insight as to what the most critical ones were and what were the most difficult to deal with, particularly between financial stability and financial inclusion.
I could respond again, Elad, if that's okay. Yusuf, again, we didn't go into the design aspects in Peru for a CBDC. That's the next phase, right? But generally, what we see in the other pilots is that the understanding of the tiered wallet is that you want to deepen inclusion, right? To deepen inclusion, you could allow people, customers, consumers, to access the CBDC with very limited digital identification. But the trade-off, as you point out, would be lower limits that you could hold on the wallet, right? So it's lower limits to again protect from any potential integrity-related risks. At the same time, you also want to put in limits, holding limits again on wallets, so that you don't see disintermediation effect from deposits into CBDC. So these are the trade-offs that I think central banks are busy thinking about and applying in the field right? This is what we see beginning to emerge. One of the interesting pieces that have come out from a number of the pilots is how do you also find a balance between what those limits are? In other words, you want to stimulate demand, but not to the point where you see these disintermediating effects. So I think this is still open questions in flight, being trialed by a number of the central banks. But you rightfully point out, these are the trade-offs that are top of mind for them. How do you prevent stability risks? How do you deepen financial inclusion? How do you, provide a greater access but not compromise on financial integrity, etc. Happy to chat more about this offline as well. Thank you.
Thank you very much.
Right. I'll read another question from the chat. Arif, I think you could maybe take the first hit on that. But what is your take on whether the introduction of CBDC in economies like Peru can help measure informal economy and easing aid in vulnerable population at times of need?
Certainly. I think, we begin to see, even in the use cases that have been put down by Peru, that G2P payments, as an example, is quite important. So that would not be surprising. And I think the reason why that is a strong use case is that it can also give you critical mass. In many jurisdictions, you would find a sizable amount of, social grant disbursements, etc. So I think in terms of measuring or strengthening the ability to understand informality, certainly, one of the aspects that digital money brings is the ability to track and trace transactions at a micro level, which we don't get with cash. So yeah, certainly buy into the idea that there's rich data that would come out, of the digital money realm. There are other aspects, again, back to the point on trade-offs, of who gets access to that data. And how do you protect consumers' privacy, etc. Those also feature in that. And would you make such data available just to the participants, or is it a broader set of entities? These are important elements that need to be thought of in the design as well, as one thinks about the availability of that data.
Thank you. And I think there was also like an important point in that question about the vulnerable population themselves, because I think the behavioral layers, understanding the habits, the social aspects, as I think a lot of the crowd in this seminar are familiar with some of the literature on that. We know that there are different aspects behavioral aspects in order to make any type of aid work. And maybe to use another example from this project, right? If we learned that the process that might be perceived as not painful, but maybe something that could be improved, of going to an ATM and withdrawing cash, that is time consuming, it requires planning, it may require transportation, not necessarily perceived by the consumers as pain, because it has some interesting and desirable social aspects to it. It's usually blend into habits they already have and do not perceive as something they wish to change. And that oftentimes could also be helping us shape what solution is needed, so that we are not trying to offer solutions that might not be the right solutions, that might be interfere with other motivations that we see as part of the problem and may not be part of the problem. And that's another interesting thing to consider when you take behavioral approach into solving such initiatives. And maybe the next question for you, Sally and Pedro, about what of all the barriers that you identified is maybe the most significant one, or maybe the one to prioritize when addressing and when designing the future engagements?
Yeah, absolutely. I think Pedro can probably chime in on the first one that jumps to my mind, because I know that it surfaced in your presentation as well, Pedro. But the idea that the cost of cash, exactly the system costs of cash, and the all of the system level issues with regard to the transport and the security issues of cash. These are things that were very prevalent and top of mind for the central bank, and exactly the reasons why digitizing money was going to be such an obvious selling point when we went speak to the stakeholders that they would see the value of this immediately and would be on board with proposing a solution like this. But from what we discovered, not only in the conversations with the stakeholders, but again in the conversation with consumers, is that they don't perceive these costs at all. Like you were saying a lot, that it's not only is it the inconvenience of going to an ATM, just like everything to do with cash, it's the easier option, because in their minds, in their perception, it's actually much more difficult to be dealing with a brand new app on their phone. The costs of effort to learn how to use that app, to keep up with the updates, to make room for that app on their phones, to make sure that they have the internet plan on their phone to be able to access the system. In some cases, they have to drive, in very rural areas, they might have to drive to a location that has the right amount of connectivity for them to be able to use that app. That incurs cost as well. And you know, that they're also very mindful of the fact that in some cases, although in not all, in some cases, they're charged a small percentage for using these means. So it's this kind of the perception of the cost of cash and the lack of that perception was something that was really surprising for us.
Yeah, Elad, Sally, you covered it all pretty well. I just want to remind everyone that this study, what we did with my team Heuristic in Peru, was focused on people who didn't use cash, or mostly they use cash. Sorry, exclusively cash, only cash. No, mostly cash. But there are many people who are willing to use digital payment methods, by the way. Now, this is, I think, an important disclaimer, because this last part could seem that there are too many barriers. Why are we doing this? No, there are many people who are already on board, but this study focused on this segment of the population that only use or exclusively use cash. And about answering the original question, what barriers are the most relevant? You said it pretty well. Everything that is regarded to infrastructure, environment, resources, the opportunity factor, habits, motivations, and beliefs. Beliefs such as cash is faster, more secure, and you can control better your spending habits with cash.
Thank you, Pedro. Thank you, Sally. And thank you, Arif. And we are already over time. So I want to thank everyone who participated. I know that there are some questions in the chat that we did not have the chance to ask, but we'll try to answer them in the chat. Again, I hope you can join a day full of events tomorrow and on Friday. And thanks everyone for tuning in. Have a great day.
Bye, Lad. Bye, Sally. Bye, Pedro.
Bye. Bye, everyone.
Thanks, everyone.